the names that you took, yes, I mean, they're very much on top of our mind, top of our radar as far as our model portfolio allocation is concerned. So Korean tech, Taiwanese hardware and semiconductor manufacturers, and even some of the onshore Chinese smartphone component manufacturers. They clearly form the core part of our model portfolio on the TMT side. I think the reason is simple. We're seeing increased demand both for memory and for tech hardware. Much of it comes from the AI-related applications and the data centers, which are so crucial in taking that chain forward. So despite the differences between U.S. and China as far as technology is concerned, and particularly the kind of companies which are being put on the entity list, we think that there would always be some beneficiaries arising even out of those tensions. And it's those beneficiaries that we tend to focus on.
Other beneficiaries within this region, some are saying, are US allies that Biden could seek to strengthen relations with in order to manage the relationship with China, rather than simply looking to aggravate or isolate China, but strengthen ties within the APAC region. Has that changed your view at all in terms of other EM and Southeast Asian markets?
One recent example of that is the RCEP, which we think would add significantly to the trade collaborations that we have seen across the region. It'll take it forward. There are estimates that it could add something like 180 to 200 billion to the regional GDP. I don't think it's a panacea at this stage as far as the geopolitical tensions and the trade-related differences that we're seeing within the region. But it's an important step in at least repairing the relationship slightly. We think that our bullishness on emerging markets, particularly on Asia, arises not just from these developments, but also from a combination of the US election outcomes being behind us. Number two, positive news flow regarding the vaccines that are likely to come through. And also the continued monetary injection that we are seeing from the global central banks. And these three put together are creating some kind of a goldilocks scenario for emerging market risk assets. And Asian equities are possibly the largest part of those assets.